Digital money, cryptocurrency, is basically the opposite of the money that is issued by the government. Cryptocurrency is maintained by using a distributed ledger or blockchain, while traditional money, which is available in the form of cash, is built by centralized distribution. The prices of cryptocurrency move high and low, so if to get the profit from trading the crypto, you should know the proper method. So first of all, welcome back to our YouTube channel. If you are new to our channel, don't forget to subscribe and click the bell icon to get all the latest updates. As we were telling you about cryptocurrency, in this video, we are going to tell you about how to trade cryptocurrency. In the end of the video, we will share some pros and cons of crypto trading, so stay tuned till last. Grab a glass of juice and stick us to the end to know all the important aspects of crypto trading. Without further ado, let's move on to the video. Step number 1. Shortlisting or selecting some cryptocurrency. There is no single best cryptocurrency, but there are best cryptocurrencies for certain use of cases. For example, Bitcoin is the best cryptocurrency to use as a reserve asset because it has the most widespread adoption and a finite supply. Most of the best cryptocurrency projects are in the top 50 market capitalization of cryptocurrency. Most small market cap cryptocurrencies have questionable use cases or have under-delivered on their promise. Small market cap cryptos are generally riskier than large market cap coins like Bitcoin and Ethereum. It's important to invest in cryptocurrencies that have a solid team backing the project. To get information about a cryptocurrency, it's best to read the cryptocurrency's white paper. This will give you an idea of how the crypto works and what its intended use is. Step number 2. Select and create an account on exchange. The first step is to select exchange on which your shortlisted crypto are traded. Some of the top exchanges are listed below, so you can check from. Now create an account. Even if you already own some cryptocurrency in your wallet, you will need an account with a crypto exchange. According to the latest statistics, there are almost 200 crypto exchanges, but all of them are not authentic and reliable, as there are some past record in which crypto accounts are hacked, so the user have to face a large amount of loss. That's why it's better to research before either than doing regret after. But there are many popular crypto brokerages, for example, Bincain, Bittrex, Poloniex, Gemini, and CEX. Before digging into it, try to do some research for your safety purpose. For trading, you have to make yourself register with them. They will ask you for your personal information like social security number, email address, and date of birth, etc. All of the crypto brokerages have different services, and their platforms are different from each other. So do some research for your security purpose and choose which seems best to you. Now, let's move on to the next step. Step number 3. Fund your account. After the process of signing up, you will need to fund your account. You can do it by connecting it with your bank account. You can do funding by your bank account through debit card or wire transfer. Even many of the crypto brokerages offer funding through wire transfer or debit card. If you want to save your money, then wire transfer is cheap if we compare it to the debit card process. Step number 4. Choose a cryptocurrency in which you want to invest. Okay, so now it's time to discuss the main step. This step will be responsible for your profit and loss. You can say that this step is a game changer in your trading journey. We all know that there are many cryptocurrencies available, but choosing the most valuable and demanding as the profitable currency will take some of your time and research. Some people don't know much about the cryptocurrency. They just invest in it to get some side income, but in return, they face losses instead of profits, which makes them unmotivated, and then they lost their interest in crypto tradings. That's why it is better to do some research in start. It will help you to be consistent and will keep your patience high. Nowadays, the most demanding cryptocurrencies are Bitcoin and Ethereum. Many people think it's better to start trading with smaller coins, but trust me, they will not give that much profit. Try to start trading with the crypto which is in trending. Always look at the bigger picture. Step number 5. Find some information and make a strategy. The price of cryptocurrencies can go up and down as these are the highly volatile asset. That's why they are unpredictable, and price can change in just a few hours. That moment can be confusing to the beginners, so if you are new to the crypto world, then try to do some investment and purchase the crypto course. It will be helpful in your journey. After completing the course, you'll be able to make some strategies and then implement them in your journey to get the desired result. Top strategy for crypto trading. 1. Range trading. If you are range trading, you want to pay attention to overbought and oversold zones. Overbought means that buyers have saturated their need and the stock will probably sell off. Oversold means the opposite. Chart indicators, include in any reputable stock chart program, can help you find these zones. Common indicators used for this purpose include the stochastic oscillator and relative strength index. 2. Scalping. Scalpers take advantage of increased trading volume to profit. Scalpers may exit a trade seconds after entering, and many use automated bots to increase the frequency of their trading cycles. Ideally, scalpers want to exit a trade before any news item or short-term fluctuation has a chance to change the market sentiment on a coin. 3. Playing Bitcoin volatility. The long straddle is one directionless volatility strategy using Bitcoin options. To initiate, you buy a call and put option at the same time for the same strike price and expiration date. The Bitcoin straddle is profitable when Bitcoin falls or rises away from the strike price by more than your premium. To exit the trade, you sell the call and put at the same time. 4. Arbitrage. Arbitrage involves buying cryptocurrency in one market and selling it in another market at a higher price. The difference in the buy and sell price of an asset is known as the spread. As a generally unregulated market, crypto allows anyone to create an exchange. This can lead to major differences in the spread because of the differences in asset liquidity and trading volume. Some pros and cons of investing in cryptocurrency. Advantages of Bitcoin. 1. Potential for high returns. 2. Protection from payment fraud. 3. Immediate settlement, international transactions. 4. Diversification, greater liquidity. Disadvantages of Bitcoin. 1. High volatility and potential for large losses. 2. Black market activity. 3. Unregulated and unbacked cyber hacking. 4. No refund. Crypto trading needs some luck and research. We hope by knowing these steps, crypto trading will now be easy for you. To be successful in this mission, you will need some trustworthy sites, wallets, exchanges, and some guides either from YouTube or any personal course. Just be consistent and try to keep patience to get the best result. So that's all for today's video. If you like this video, don't forget to hit the like button and share this video with your friends and family. Don't forget to subscribe as we are going to post such informative videos in the future as well. Soon, we will be back with a new video. Till that, take care.